As Donald Trump begins his second term, his administration's economic agenda is already a point of intense focus for the Federal Reserve. With recent rate cuts totaling 100 basis points, Fed Chair Jerome Powell has signaled a pause to assess the uncertainty surrounding Trump's policies. Trump's proposals, extending tax cuts, increasing tariffs, and easing regulations, could significantly impact growth and inflation. Here are four possible economic scenarios under Trump and what they could mean for the Fed's next moves. Number 1. Strong growth, high inflation. If the economy overheats and inflation rises, the Fed may need to consider rate hikes instead of cuts. Number 2. Strong growth, low inflation. Healthy growth with cooling inflation could allow modest rate cuts, but it won't be urgent. Number 3. Weak growth, high inflation, aka stagflation. A challenging scenario where rate cuts could worsen inflation while doing little to spur growth. Number 4. Weak growth, low inflation. In a recessionary scenario with cooling inflation, the Fed would likely prioritize cutting rates. This policy uncertainty has investors on edge. While the Fed is expected to adopt a wait-and-see approach, Powell has warned against cutting rates too soon, drawing lessons from the 1970s inflation crisis. This period of economic unpredictability highlights the importance of diversification for investors. Gold and other precious metals can act as hedges against inflation and economic instability. Now is the time to consider your financial strategy. Call American Alternative Assets to learn how to protect and grow your wealth in uncertain times.